Well, hello. I'm here with Giuseppe from InvestBev. He's the managing partner and the chief investment officer. Thanks for coming on today.
Yeah, thanks for having me, Bubba.
If you wouldn't mind, could you give us the 30 seconds on InvestBev, and then we'll get into it.
Yeah, of course. So, InvestBev, we bring together investment and beverage, right in the name. We bring beverage industry expertise and financial expertise together to try to be the preeminent partner for the adult beverage industry. And we invest, lend, and support brands across the beverage space.
And you specifically, what's your background? How'd you end up there?
My background's in the investment management side of things. I started my career at Bank of America, but spent many years investing the capital of large institutions like state pension plans, endowments, foundations, in private market deals and funds. And what I found particularly interesting was that subject matter expertise and particular focus versus a generalist investment strategy really generated better returns over time. So when my partner Brian Rosen approached me about starting InvestBev, I jumped in, given the concept that we were talking about would be solely focused on the adult beverage space and understanding some fundamentals of the alcohol industry, how that could be very attractive to the investment community.
I'm really particularly excited about having you on because a lot of the subscribers and the guys who read are portfolio managers of like different sizes of funds. And so that perspective of, hey, it's not about just what makes money, it's how does this work in the context of a broader portfolio when you've got real
Yeah.
estate private equity. So that'll be cool. As a starting place, traditional CPG investing, think cereal, ice cream, energy drinks. Everybody has some sort of an understanding of that space. How is the alcohol world different and how is it similar to that?
I think it's similar in a lot of ways in that you really have to think from an investment perspective, you have to think around two important constituents, right? This consumer is consuming something today, and my product is going to substitute that. Why? Why is this going to take the place of that, right? And so that needs to be a fundamental decision across any kind of CPG product of how this is going to kind of win relative to the thing the person is using for that need case. What's different around the adult beverage space from an investing perspective versus those other categories? There's just fewer institutional groups that are willing to have exposure to the space, either directly by investing, directly into something, or indirectly through a fund for any number of reasons that we can get into. I think partly because it's a highly regulated industry, partly because of maybe some scars they've had in the past or other people have had. I mean, there's certainly reasons why, but there definitely are fewer folks kind of going after our space than others.
Yeah, totally. And from my perspective, I've always loved that about the industry because I think the guys at Blackstone, KKR, and L. Catterton and all those places are incredibly smart and capable. And if it is my preference, I would not want to compete with them. Masters prize pool, amateur competition is kind of the dream. And that regulatory mode is really unique for this space.
Yeah, we did a comparison that we have in our deck that talks about the size and scale of the broader CPG market and the number of investors that are registered or funds registered through Preqin relative to the size of the alcohol industry and the number of investors like us who are going after the space. And it's basically like a 5-to-1 ratio in terms of the amount of kind of white space there is available to us relative to those folks. So that gives you some comfort as we sit in my chair.
I mean, coming from the Texas guys of background, I compare it a lot to oil and gas. The S&P 500, their allocation energy is less than half of what it reflects to the GDP.
Yeah.
There's environmental reasons or understanding or regulatory reasons that people don't engage with in oil and gas. It's kind of, hey, we don't touch that. We'll focus here. But for the guys who understand it, there's opportunity. That's something that drew me to spirits. On the portfolio management side and kind of what you used to do, if I'm a portfolio manager managing 100 million, a billion, whatever, public equities, real estate, traditional private equity, buyout, whatever, why would I allocate something to alcohol? What does this asset class do? What does it hedge? What does it give me that those others don't?
Yeah, that's a great question. I mean, most investors, as they look outside of the public markets and into alternatives, they're looking to do two things: enhance return and protect against volatility. And, I spent the early days of my career working with some of the largest and most well-resourced entities out there. And even those folks were hyper focused on building a kind of portfolio of asset classes that complemented each other and limited the correlation across their whole portfolio to have these kind of huge swings, which, simply put, you just don't want your assets or wealth to experience huge swings, especially towards the negative, right? Building a portfolio of assets that don't behave the same way helps avoid that, right? That's fundamentally coming down to correlation. It's how things behave relative to each other. And adult beverage is particularly adept at this point, as it kind of has always showed limited correlation to pretty much every index and asset class you can think of, given that people, drink in good times and bad. Anecdotally, we kind of think that, but the data bears that out, and it's true. So it's not to say that alcohol can't have, good years, bad years, good times and bad times, but historically speaking, it's not nearly as volatile, and it doesn't perform in lockstep with other categories, which is definitely to the benefit of a broader portfolio construction.
There's not many asset classes I can think of that have the ability to rise with inflation and be connected to purchasing power, but also have this kind of recessionary downturn inverse correlation in those levels. And that's really unique, especially when a lot of portfolios go strong one way or the other that direction.
Yeah, 100%.
So going kind of to the specific investments, to spirits, I think a lot of people, when they first see these investments, get scared away by the lack of cash flow. Like, there's no cash flow. There's never going to be cash flow. Why is that happening? Where's the cash flow? Why should we be concerned? What should we be looking for?
Yeah, I think the challenge with adult beverages, you see as brands kind of try to get into the space, they're not creating more consumers or more shelf space at retail or a bigger back bar. As we kind of said earlier, right? They're stealing share from somewhere, from another category or within their own category. And so the cost, a lot of it has to do with marketing and distributor incentives and things like that to kind of get going and get your brand in the right places and the right attention that you have to do in advance of sales, right? And you got to do that market by market. So even if you start getting in a position where one market's going well, when you go to the next market, it's going to be relatively challenging to do that same thing again. Another piece of it is that the early stage of these brands is the unit economics are typically pretty bad, right? They're coming out of the gate paying more for things like a sleeved can versus a printed can, buying smaller lots of raw distillate if they're using, whiskey in their product, and you don't have the pricing power if you're buying in small increments. Or they have minimum production runs, and so they have to produce more than they actually need, and then they have excess inventory that's tied up, and you have to pay for storage of the inventory. You were between a rock and a hard place because you needed to produce the product, but you also didn't need that much, and now you're doubly hurt because your capital is tied up in inventory that you didn't need, and your cash flow is hurt by having to pay for the storage of the goods. So it can be really, really painful in those early years. But we work with brands and try to think through, what are realistic goalposts to get to from a unit economics perspective, and what are the things we can unlock at certain levels of size, scale, time, what have you, versus the adage of we'll make it up in volume, and that doesn't carry as much weight as a tangible plan.
And so, if that's the case for a lot of these brands, and unit economics are tight, and there's a lot of costs associated with it in the 3-tier system, and margin going everywhere, for the investor, where does the return come from? If we've got years of negative cash flow, how's it going to be kind of big enough to give us an IRR to be excited about, or to be comparable with something else?
Yeah, returns in our space are really going to come at the exit. Our portfolio company's path to exit is to sell to a strategic. It's typically not going to be an IPO or something like that. And the strategics in our industry, like your Diageos, Beam Centauris, Constellations, and others, just like in other CPG industries, they're very highly incentivized to pursue a buy versus build strategy, right? And so it becomes really appealing for them as a way to reach and capture the spend of groups that they aren't reaching with their existing portfolio. They can go and buy the traction that another brand has accomplished with young consumers, a certain demographic of ethnicity, what have you. If they can't reach that with their core products, and they find a product that is absolutely incremental to their business, to kind of put that on top of what they're already doing. So they'll pay up in those instances because everyone is sort of competing for this brand that's found the secret sauce, right? And that leads to high revenue multiples. And we've seen multiples, in years past, certainly in the double digits on revenue, And even now you're seeing it on the high single digits, even in a less heated environment. So that can be a really, really attractive investment. You get it right. And we put a lot of time and energy, not just investing and holding, right, but actively managing the improvement of the business and the connectivity to those strategics on the back end to kind of prime them for the potential to be ready to be acquired, and who's kind of taken a look under the hood, or at least knows of their existence at the very least.
You spoke a little bit about kind of what multiples were, got up to double digits, and they're still looking strong. But I mean, that draws me back to Casamigos. I think that was the first deal that really brought the economic opportunity of spirits to the broader psyche. George Clooney, you hear all the stats, he made more money from his investment in this tequila company than he did his entire movie career. What the heck is going on? We've seen a flood of it. Since then, we have seen a lot of folks that have invested, and I hear stories all the time, people who've invested in brands after that time that either haven't returned that investment or haven't seen the multiple. Like, what was Casamigos? What did that show? Like, how has the market changed since that time?
Almost every deck you saw for years had Casamigos in it as an example of kind of here's what's potential, but the person presenting it was not George Clooney, right? And it's not.
I still see Casamigos all the time in decks. I don't know if you're seeing
Yeah,
better people
yeah.
or they're taking it out.
No, but I think there was so much that was unique to that scenario, right? So one, tequila itself was already growing at that point, right? So you are catching a little bit of the tail of the kite as it's going up. But then you also had the authenticity of it, not in that he's authentic to tequila, but that they were legitimately behind the brand, right? This was something they created for themselves that they actually were consuming, and so people thought, I'm drinking what George Clooney drinks. They resonated there. And then the last thing, which I think was, you can never go backwards into this world, is that if you walked into a liquor store at that time and you looked at the tequila section, you would have said, here's Jose Cuervo, all these brands that are not affiliated with anybody. And then you saw George Clooney and George Clooney's brand. And you said, oh, that's George Clooney's brand. That's interesting. I'll buy that. But now when you go into the liquor store, you see George Clooney's brand next to Matthew McConaughey's, next to Kevin Hart, next to Mark Wahlberg, next to Kendall Jenner. And now you've fractioned off these consumers who care about celebrities into their own allegiances, and it's less of an interesting concept. And I think there's also even become a bit of a blowback on the celebrity piece because there's been so many folks who have put their name behind a brand and it's totally inauthentic, and consumers are smart and see through that and resent that oftentimes.
I'm hearing you. That was kind of the perfect storm. We had tequila. We had this first kind of connection of a celebrity, the line that was alone, the first mover in the category. Now it's moved away from that. And, would you say it's kind of back to fundamentals? What now is driving investments? What do you guys like to look at as investors? Is it the celebrity that's attached to it? What do you look instead of that?
If I have to boil it down to maybe the number one thing that I really get excited about, if a brand has a really strong understanding of who's their customer, right? Understanding who is the core consumer of your product and how to speak to them is a game changer for a number of reasons. The greatest of which is, if you don't know who your customer is, then you don't know where to find them and you don't know how to speak to them, which translates into a very expensive way to build a business, because then you are just spreading yourself everywhere and trying to support all these markets, all these types of retail channels, all these types of marketing channels, because you don't know who you're talking to, what voice to speak in, and who you're trying to reach. And so these brands, like give an example that something we're not invested in, but I think they've done a great job, is a brand like Beatbox, right? Beatbox, you can debate whether, you or I, it's a product for me or you, but if they know who they're selling to, and the consumer who buys their product is very clear to them. It's this young consumer, music festival going, this kind of artsy, artistic sort of vibe, music focused consumer, which is a very big consumer base, and they know how to speak to them with all of their marketing. They know where to find them from all of their placements at music venues and things like that. And they've been incredibly successful for exactly that reason. And so that's something that it helps from an operational perspective to know who your customer is. But then going back to the point about why you're going to get acquired, if you know who you're speaking to, and if I'm name your strategic who feels like I'm not reaching this 21 to 25-year-old who loves going to music venues, this is the product that I'm going to buy because they clearly reach that audience. So that's probably the most interesting thing to really kind of dive into with a brand, make sure they understand who they're trying to reach.
Yeah, it's that wallet share piece you talked about earlier.
Yeah.
I wrote a little bit about the Beyonce launch to Sir Davis. We just spoke about celebrity brands and how that's maybe not the differentiator just by itself. But what I think she did that was really brilliant is what's the demographic of whiskey drinkers of these old Scotch style flavored things? It's older white men. It's 80% older white men. And what's the demographic base of fans of Beyonce? It's radically different. There's a tons of overlap. You're bringing a new share of wallet to consumers to a category they're not in before. So you say, hey, there's another celebrity-backed, whiskey brand. That's not going to be anything. It's like, hey, she actually understands that the consumer wallet share is what's attractive and what's valuable in it. And so just knowing the two brands that are both celebrity-backed could be very different strategies in kind of solving that in different ways.
100%. Yeah, it'll be very interesting to see how her brand does over the long term here. We'll see.
Yeah, I try not to get into the practice of doubting Beyonce. I think people probably lose a lot of money. Are there any kind of recent investment you guys have made that you're really excited about that you could tell us about?
Yeah, really recent, as in I signed the documents today.
That's exciting.
We invested in a company called Renee. It is a ultra premium gin, and this is coming out of our Fund 5. And we like the category. Gin has not experienced the premiumization that we've seen in other spirits categories. And even though there are many gin-based drinks that let premium products shine through, right? Your martinis, gimlets, etc. So to that end, right, you don't have a well-developed subcategory. So that also means that the strategics in the space don't have deep portfolios in that category. So as you think about from an exit perspective, there's a lot of potential dance partners for them if they are successful. So from a category perspective, I like both of those fundamentals. And when you look at the company specifically, aside from being a very beautiful bottle and a delicious product, the thing that I like about it is the authenticity and the transparency that it brings to the table. So the brand was founded by Alex and Emma Watson. And Emma Watson, obviously famous for Harry Potter, but that's not necessarily as important of, what are you famous for from a celebrity perspective. What's interesting is that there is an authentic connection to the product in that all of the ingredients that they use are sourced from their family's vineyard in France that they've owned for decades, right? So this is not a celebrity slapping their name on sourced juice from some name your location. This is an authentic connectivity to a family lineage. And then Alex, her brother, has been in the alcohol industry, worked at Diageo, etc. So he's not a novice, right? He's knowledgeable of the space. So I think it really taps into, going back to the kind of this authentic and transparent theme. It taps into this broader theme that we're actually writing a white paper on internally around transparency, where consumers today want transparency into who's behind the product, how it's made, where it's made, what ingredients are in it, and the health considerations that come from the ingredients that are in it. So with that information, consumers can then make informed decisions and use their dollars to vote for the things that they care about, whether that be being a certified B corporation because you're doing something good for the world, or if you have zero sugar, right, in your product. Consumers want to be informed and want transparency to the products, and then can make their own decisions. And I think this really kind of ties into that.
Well, congratulations on that investment. I mean,
Thank you.
Continuously impressed with you guys when I do my analysis as an investment maker trying to evaluate that white space and strategics. You look at categories where a single brand is dominated from a single company, that just means white space for a lot of other companies. And so premium gin is one of those deals that's been so dominated by a single brand. There leaves a lot of market share and wallet space to be taken from that brand over time. It's a great category. You engage with the consumer. You own the consumer. You know who you're going to. That's hope it's good for you.
Yeah, appreciate that. We're excited about it.
You mentioned you're investing out of Fund 5 on the beverage side. Are the funds separated between the barrel side and the brand side? How does that work?
Yeah, so we've had a series of funds over time. Some of them have been commingled across both. Some of them have been one strategy or the other. And so as we're raising this fund, it really sort of is two sub funds, a barrel fund and a growth equity fund. And so folks, oftentimes want exposure to both because they are complementary, or may kind of pick their poison.
Are you actively raising for both of those funds right now?
We are, yes,
Okay.
actively raising.
Well, if anybody wants an introduction, I'd be happy to make the facilitation. Feel free to reach out. But thank you so much for spending some time with me on Friday. It was great to meet with you and hear more about InvestBev and hear the portfolio manager's approach and the reason why they went after this and having that perspective. I think that's incredibly valuable and grateful for it.
Great. Yeah. Enjoyed the conversation. Thank you.